Hey, it's TaxQuips time from TaxMama.com. Today, TaxMama hears from KD in the TaxQuips Forum, who is justifiably confused. She says, I was looking over our tax return and was wondering why we're paying almost 50% as an effective tax rate on our income. I'm currently unemployed, and my husband is an independent contractor. Our CPA included a chart with this year's tax return. It showed our marginal tax rate at 10%, but our effective tax rate is really between 41 and 47%. Could this possibly be right? Shouldn't our effective tax rate be lower than the marginal rate? Well, KD, please ask your CPA to explain your effective tax rate to you. Without actually seeing the numbers, I certainly can't explain. But I can guess from what you've told me. Normally you'd be correct, but bear in mind any tax rate shown on his chart is only the income tax rate. It doesn't include the self-employment taxes, which in 2011 are 13.3% of his business profits. His business profits are all taxed at that rate, even if they're not taxed for income tax purposes. So your itemized deduction may have reduced the overall taxable income, but the 13.3% will be on a higher level of income. Let me illustrate for you so it makes some sense. If his business profits were $30,000, his self-employment taxes would be around $4,000 rounded. Now, if you had a mortgage and charitable contributions and so forth, bringing your taxable income down to $16,000, your federal income tax would only be 16%. That's 10% of your income. However, your total taxes would be around $5,600, $1,600 plus the $4,000 self-employment tax. That would appear to be 35% of $16,000, even though you're in a 10% tax bracket. Does this look like anything that happened on your tax return? And remember, you can find answers to all kinds of questions about tax rates and other tax issues free. Where else? At TaxMama.com.